Anyway, my background, I'm a full-time trader. I trade Forex, obviously, that's why I'm here, but I also trade futures quite a bit as well. I started off as a student at Online Trading Academy back in 1998, and from that time on, I learned how to trade through the courses at Online Trading Academy. You may have seen a lot of the webinars from Sam Sliden right here on FX Street. I work with him and also learned quite a bit from him as well. And I've continued my education. I became a chartered market technician, which means that I've got a lot of education in the markets as far as technical analysis. The interesting thing is that I don't use a lot of what I learned in the CMT. I want to keep my trading relatively simple. Oh, there we go. Let's see, start the video. I wonder if that'll actually do a video. There we go. Now you can see what I look like here. Got my webcam on the screen. Anyway, let's make sure I smile. That's all. All right. Anyway, I've continued my education. When I look over, I've got a couple of monitors here so I can see your chats as well. I probably look much better with the video off, right? Anyway, so what I've done is I've continued on my education. I became a chartered market technician, so I've got a lot of information about how the markets work and a lot of technical analysis. But when it comes down to my actual trading, I want to keep it relatively simple. And I'm primarily an intraday trader for my income. I do have some longer-term accounts in which I'm doing some longer-term trades, and generally I like to do the long-term trades with the current markets, because if you've been in the currency markets at all, you know that what happens is that the currency markets go into long-term trends, and that gives us a great opportunity if we are looking at some investing opportunities in the markets. Have I got a new trade to pen? Well, we'll take a look. You know, that's one of the things I just look to see what's available to me. As a short-term intraday trader, I do run some screens from time to time, and what you'll notice, first of all, as far as my intraday trading, I'm always looking at multiple time frames, no matter what it is that I'm trading. So if you take a look at my screen first, you'll see I've got my perspective time frame, which right now we're looking at the euro dollar. What I'll do is adjust this a little bit, and it doesn't really matter which platform I'm trading on. In this case, I'm using TradeStation today, but I do use, these are short-term charts. We'll do the axis a little bit bigger as well so we can see those. And my status line, I'm going to clean this up a bit. There we go. Now you can see I'm looking at the euro dollar on a 30-minute chart, and the reason why I'm looking at a broad perspective here, I'm going to use this, for two main reasons. Number one, okay, this is what I call my perspective time frame. So let's just do this, perspective time frame. And the reason why I have a perspective time frame, first of all, I want to know what is my overall trend. Okay, as a trader, I typically trade in the direction of the dominant trend unless I see an opportunity where the trend is going to reverse. And the trend is typically going to reverse when it hits a major barrier, such as what we call supply or demand zone from a larger time frame. So I'm not going to go too much into detail about what a supply or demand zone is. I will leave that back to Sam Sliden in some of his webinars, or maybe some of the webinars that I do in the future as well. Talk about how to identify some of these opportunities with a higher probability. This is really what I teach in my classes, how to find the highest probable turning points for the markets. But I look at the overall trend on this frame, and I want to trade with that dominant trend. Secondly, I want to identify what we call supply and demand zones. And the reason why we identify those zones, that's obviously where I want to buy and sell. So the trend tells me the direction I should be focusing on. Now, when I look at an overall trend and I want to identify what trend I'm trading in currently, I'm going to go ahead and look at a minimum of 200 candles. That prevents me from looking too closely at price and focusing on a trend that may be a short-term rather than long-term. So right now, if I just looked at the current trend from this morning on the euro, we see it's a big move to the upside. However, when I take a step back and look at a minimum of 200 candles, which I can zoom out here, I can see that that is just a small movement in an overall downtrend. Okay. How do the small time frame charts fit into long-time transactions? I'll go into that in a minute. Okay, I'll talk about that in a little bit. Really, they don't have any function for me on the long-term transactions. Okay, what I'm focusing on here is my intraday or income type of trade. Okay, and when I look at the larger time frames, what I'm going to be doing is using longer time frame charts in order to be able to do that. So my prospective time frame gives me the direction I should be trading in, and also tells me the big barriers that I might have while I'm looking at intraday trades. So right now, if I take a look at this, we have an area where price is kind of based. Oops, click that too soon. Let's do this. Do I see double bottoms? You know what? I don't like trading tops, double bottoms anymore because, well, by the time you recognize a lot of these patterns, either they fail or it's too late to trade them. So I'm actually going to be focusing more on what we call supply and demand trading rather than trying to focus on heads and shoulders, double tops, double bottoms. So Ahmed, take a look at that on a 1 hour time frame a little bit later, but I want to focus on what I want to discuss here rather than just simply picking out trades. Okay, I'm going to be talking about technique, and if I see some trade opportunities, then I'll go ahead and do that. But I just want to expose you to some of the ways that I actually trade and what I use to find opportunities. For instance, this morning, I'm actually in Philadelphia area right now. I live in San Diego, California, but in Philadelphia, I'm teaching a class on trading, and I was able to take a trade in the Qs because we were focusing on stocks, and I actually was able to exit at the low of the day. I closed out my trade literally at the lowest point of the day because I'd identified the right turning points trading on these techniques I'm going to share with you. Now, looking at this, this is an area that I would look at as, we had equilibrium between buyers and sellers noted by the small red and green candles, but obviously the selling pressure won because we had a huge move to the downside afterwards. So if we get back up to that area, there's still likely to be a lot of selling pressure for those who could not get in originally on that move down. Well, you look up above and you also see an area like that a little bit higher. This is not going to interest me for selling, partially because it's very high up and we'd have to go through this lower area first, but secondly, looking back, that was simply the first time back to an area of supply. Oops, it's a little bit off my screen. There it is. That was actually my first time back in a retest of this area as supply. So I only want to take the first time to an area, and what I'm doing in this time frame, this perspective time frame, is really just getting an idea of where prices are likely to go while I'm looking for intraday trades today. And looking back, I don't see anything below where we currently are, so I'll mark off the origin of our overall move upwards, and that's going to be my area that I call demand. And right now, it's kind of like the room that I'm sitting in. And what about the zone about 1.3? 302. Oh, this little area right there? That is also a zone. But we didn't really have strong movement with that. It would be exactly level on top of level. That's something that if you've been involved with all trading academy, use as one of our awesome answers as well. So there are two supply zones right there, which means that what do you think is going to happen with the euro if we try to get back up to that area? Is it going to be easy to push through that, or do you think it's going to be met with a lot of selling pressure? Yeah, exactly. Herb says it's going to be hard to get through that area. There's going to be lots of selling pressure, Lucas says. Absolutely. Roger. Yeah, that's what we're going to be seeing if we get back up to that area. So I'm going to be seeing right now, on the short term, we're probably very bullish, but I'm going to be setting myself up for an opportunity to look for shorts if we come up towards this larger time frame area of supply. Well, as far as our move to the downside, there are some pauses as we come back down. There's a pause right here on the way up and a pause right here on the way up. But that's not going to concern me too much because the origin of the overall move, or what we call the curve, originated from down here about 129. So there's still going to be an intraday opportunity this afternoon perhaps to short once we get up to about 130 on my smaller time frame. So I go to my trading time frame, which you see here. I'm using a 5-minute time frame. Let me format this so we can see the text a little bit bigger as well. Okay. This is one of the key things. I always want to make sure I'm looking at multiple time frames. Sorry, I wanted font. That way I'm not surprised. Okay. And this one's a little bit smaller. There we go. And this one a little bigger. Sorry, I should have had this set up, but I was in class earlier. There we go. Yes, my target may be the demand zone. Oh, for my Stanford class. Hey, Chris. Okay. So overall, looking at this now in the smaller time frame, what you'll see is that this is what I call my trading time frame. And I like 5-minute charts for my trading time frame, partially because the size of the supply and demand zones are manageable for intraday trades. I will still look for anything from about 40 to 60 pips on a move, but I don't want to risk too much. I usually want to maintain a 3-to-1 reward to risk ratio. As far as the indicators I have in here, I'll go over some of these a little bit later. I'm going to disable this one for right now. Okay. And why exactly, Christy? This is a good one. Will I sell in those areas? We'll talk about that. The reason why I'm using this particular time frame, this is what I call my trading time frame. Okay, and with my trading time frame, it could be whatever you select. Okay, I'm using 5 minutes for my instance. The reason why, when I'm looking at these supply and demand zones, they're relatively small. Okay, that gives me very little risk in comparison to potential reward that I could take. And because I'm an intraday trader, I don't want to be stuck in trades for many, many hours. I typically want to make my 40 to 60 pips within an hour or two and then walk away. And go to cash and just leave it at that. So for my trading time frame, once again, I'm going to be concerned with trend. But if you notice, my trend currently is up. Okay, now the big picture is still down, but right now I should be opposing that. I should be in a small uptrend because I need to be able to move up to strong areas of supply for me to sell. So overall, number one, I look for the trend. Number two, I look for supply and demand. Okay, number three, I'm going to manage my trade. I'm going to manage my trade on this time frame. And what I mean by manage the trade, number one, let's put this as A, I'm going to find my stop. Number two, or B, I should say, I'm going to find my entry. And number three, or C in this case, I'm going to find my target. Okay? What do I mean by supply and demand? Well, like I said, it's kind of outside the scope of what I'm going to talk about today, but you may know these as support or resistance levels. Okay, but what it comes down to, support or resistance, the traditional definition of support or resistance is simply an area where prices have turned in the past. Or if you look at some of the definitions that you get from the technicians out there, they say it's an area that prices have had difficulty moving up above in the past. Well, the problem with that is you could call this an area of resistance. This is an area of resistance where prices, obviously right here, tried to move up and they started coming back down. But according to definition, the traditional definition of supply and demand, every time you come to that area, right there, it turned down. It worked. Right here, we turned down again. It worked. But what's happening now? If you try to take a trade there again, you're going to lose money. We're going to likely push right through this level and up to the 130 level. The reason why? Every time you come, well, let's put it this way. If you're at a beach and you watch the ocean, okay, every time the ocean comes up and hits the beach, it removes some of the sand. It makes that area weaker. So for people to say every time it comes up here, it's going to make this area of resistance stronger, that's ridiculous. It actually weakens it because what it's doing is removing the selling pressure that initially caused this move to the downside. Third time's not the charm in this case. No, honestly, usually what will happen is I only take a trade on first time back to an area where I saw that there was an imbalance between buyers and sellers, and the sellers were very, very strong. Okay, so to me, supply and demand is actually a little bit different than support and resistance. And you can see, just as I'm talking, there's that breakout that I said was likely to happen. Okay, I don't trade the breakouts either. But do I find that the 5 minutes is too noisy? No, actually I don't. I really don't. I find that there's an opportunity there. I'm not worried about every little turn in the market. What I'm looking for are the strong, powerful moves that originate an overall trend direction. So looking at this from a bigger picture, when I'm trying to find my stop entry target to trade here, what I'm going to be doing is looking at my larger time frame, and we've got that 130. See, what is my actual level? I'll just go ahead and do this. Got these trend line labels that actually label that information for me. There we go. It's for about 129.98 to 130.13. Okay, that's that first area of supply that I'm looking at on the 30-minute chart where we're likely to reverse. I go into my smaller time frame, and now I can fine-tune my entry based on that. I know that there's likely to be supply in that area. I'm going to disable these pivot points. I don't really need those either right now. Those are just some assistance I get sometimes in looking at price. So what I'm going to look for is a supply zone or an area where there was balance between buyers and sellers, but then I saw a big movement of supply or big movement of selling pressure that pushed us away from that area. And this is it right here. This is what I'm going to be looking for. It's got to be a big move down and overall very close to the origination of this downward trend. I wouldn't take this as a selling opportunity down here. Reason why? Look at the overall move. From the high right here around 130.60 to the lows right here at about 129.40, this is too low in the overall move. It's got a lot of risk. As a matter of fact, if I tried to sell on the first move away from that, I barely moved down 40 pips. I'm looking for a pretty significant move, something like this, where you can see we moved down from just over 130 down into almost 129. So that's almost 100 pips there. Is this a test of a previous level? The question comes up. Well, to me, I'm looking back as soon as I draw out this line to see, is it an area that's been used before? In this case, we had a little bit of a pause, but we did have a very significant move away. So I'm going to plan my trades. The fact that this area of supply that I'm noting right now is also an area of supply from the larger time frame, it gives me more confidence in taking that particular trade. Because I know it's not only a big origin of a selling candle here, but it's also, as I mentioned, this area of supply, which once again is very close to the top, or closer, I shouldn't say very close, but closer to the top of the overall move down. So that is not only on my 5-minute chart an area of supply, but it's also my area of supply, my 30-minute chart. So I do have a higher probability of this one working out. Now, this perspective time frame, I do want to make a note on this. For that perspective time frame, that should be basically the trading time frame multiplied by either 4, 5, or 6. Okay? I don't want to go from a small time frame and jump to a very large time frame. So what I did was I took my 5-minute chart, which is what I'm trading on, and I then multiply it by 6 in this case, and I've got a 30-minute chart from my perspective. Now, I don't really watch the 1 or 2-minute charts for my time frame. Okay, and on this time frame, I'm not trading here. I'm going to trade my 5-minute chart. So I'm going to manage my trade by figuring out my stop, entry, and target on this time frame. So I go in once again, and I'll put in my trend line labels, make sure they're there, so I can see my price levels. Okay. And I'll do background dragging so I can pull this back here a little bit. There we go. If I'm setting up a trade, right now we're in an overall uptrend, but because the larger time frame supply is in this area, okay, I'm expecting to turn around in this area. And I'm going to put in a short order, or sell order really. We're not shorting in Forex, but we're going to sell. Now, my target could be an origin of a strong move on this time frame, but I usually do multiple targets. So I'm going to put in one target here, and what I look for is the origin of a strong move. Not just every little turning point, but in this case, we see that towards the bottom of this overall uptrend, I can put in my order to target that origin of a very powerful bullish move, because there's likely to be some leftover buy orders when we come back there. We left the area very quickly, which means anybody who wanted to buy didn't get a chance to buy there. Only a few people did. So I'm going to wait for it to come back to that opportunity and then buy. Okay. The next area would probably be most likely the origin of this overall move down here at the 129.25 area. So could I put in a limit order for this? Yes, absolutely. Depending on how high this ranks on my trades, I could put in an order for that right away. So if I do my order bar, I'm just going to pull this off here real quick. And I could put in, we'll do for standard lot. I'm ready to put in the order yet because I need to take a look to see what's happening, not just on this time frame, but also my larger time frame, because I'm using multiple time frames. We'll typically target my first area for exit on the small time frame, but my second target would be the larger time frame, so that's 129.25. While my first target is, what is this level? Refresh my chart. Oh, thank you, Chrissy. 129.45. So I've got two targets, okay? So my first target would be the origin of a strong buying pressure here. And then my second target would be the larger time frame demand zone. As I mentioned, that was the 129.25. So when I put in my order, could I put it as a limit order? Yes. Okay. My supply zones also line up with the average daily range. And that's usually what will happen, absolutely, because the average daily range gives you an idea of how much momentum a trend may have before it dies off. So I could put in this order as an OCO order. It would be an OC order sell order, or one cancels other. Let's see, here we go. And I could put in my limit order to sell at 130. Let's see, that's 08, and I believe I'm on the ask. So I'll go ahead and put it in a little bit below that just to get in. So maybe 06. Oops, I have to fix this. It's not set up right now for Forex, is it? Bear with me for a moment. I didn't have this set up. Anyway, you can see the type of order I could do that. As an Aussie answer, would it be necessary to correlate with the U.S. dollar index? Honestly, the U.S. dollar index should have the same sort of levels of demand as I'm seeing here on the supply, since 58% of the index is made up by the euro anyway. So I'm not really too worried about that. Okay, but what I would do for my order is I was just showing you real quick. I'm not going to adjust for the decimals at this point. And I could do this on any platform. Okay, I'm just happening to use this platform today. But right there is where I put my limit order. I put in my target here for my first target and my stop right there. I can also do multiple stops if I wanted to, multiple targets. That allows me to do that. Okay. Yeah, if the U.S. dollar is near a demand zone, then we should be seeing the euro near a supply zone. We would be opposites. Now, the question was, do I wait for confirmation for my trade? If you notice, I still have another time frame here. The other time frame I would use inside of that area of supply, we already identified that supply 130.08 to 30.13. I can go down to my 1 minute chart, put in a line there, 30.08. There we are, to 30.13. And when I put in, there we go, there's my zone. What I can look for if I need confirmation, what I will do is go down to this 1 minute time frame, and as prices move into that area of supply, I drill down to the smaller time frame, and I look for some sort of a, there it is, where's my price? There it is. I look for some sort of confirmation inside that zone. So this is where I can actually read the candles. So this is what I call my entry time frame. Now, if I'm doing a limit order where I'm setting the order ahead of time and forgetting about it, then I don't have to do this. But if I'm waiting for it to watch and see the bearish pressure come into the markets, I will actually drill down to this time frame and look for a candle formation that tells me to enter. And what I mean by that, I don't necessarily look at Harami or some sort of bullish or bearish hammer, or dragonfly or shooting star, things like that. And I don't care about that. There's actually only three things I really need to focus on, four altogether, really. Number one, I want to look at the color of the candles, because if I see mostly green candles, we're in a pretty bullish trend. If you notice, when we start to pause like we are right now, we get a mix of red and green candles. That gives me a little bit of an idea as to how the trend is either continuing, because if it's mostly green, it's still very bullish, or if we start to see red and green mix, it shows me, hey, trend might be changing. This may be your entry you're looking for. Number two, shape. You don't need to memorize the names of candles. If you see topping tails or bottom tails, that tells you a lot about what's going on in price. You can see on this candle over here, let me just do this. This candle, it was created, it's a green candle, but there was a big topping tail, and that was a warning sign that there's bearish pressure coming in just before prices turn down. Conversely, take a look at the bullish candle here, and right there, you had bullish pressure. And that was a warning sign before the prices took off. So if I see that in an area of supply or demand where I'm looking to take my entry, that's some of the confirmation I'm looking for. We also have size. Okay. And one of the things I can refer you to, and I know that some of my lessons from the pros articles are also published on FX Street. If you take a look for some of my articles, you can Google me or look at the Trading Academy website. It's Oops, let's do this. You go out to tradingacademy.com. You can go to the Lessons with the Pros, and I write a lot of articles. I actually write 2 per week. And one of the articles I wrote about was called Tale of the Tails, where it talks about the color, shape, size, and location. So one of the ones, I could probably just bring it up, I guess. I guess still browser open. Hopefully that runs pretty quickly. It's still in? Yeah, good. So if you go to the Trading Academy website, this is where I teach, and you have the Lessons with the Pros under the resources. So I'll just go in real quick and do a search, and one of them is, let's put in the word tail. Right there, Tale of the Tails. You can go ahead and see the Lessons with the Pros article. This was from June 26, 2012. Talks a little about the price action, and there's that handsome guy right there. Anyway, it talks about how you can read some of the price and how you can use it to help you identify trend changes. Okay. Yeah, and the other one I wanted to point out was, I believe it's called, oh, no, it's not ladder, it's flagpole, sorry, my bad. It is flagpole. That's what I'm looking for. So the other one is right here, Climbing a Flagpole, from February 15, 2011. And on this one, I was talking about how do you identify when the amateurs are jumping in and where prices are likely to turn. So what happens is that this is referring to the size of the candles. I don't go too much in depth into the article. That's Sam Seiden now. I got a better smile. Sam Seiden's there too in these articles. Anyway, so looking at the size of the candle, it can give me a warning sign as to when prices are going to turn around as well. And the last thing, which is the most important, is going to be location. Okay, so looking at location, where is it coming? Is it at a supply or demand zone? So those are all kinds of indicators I'm looking at to give me an idea of how price is going to react. So my entry time frame, as I come into that area, if I didn't already put in a limit order to enter or exit at that level, this is where I'm going to go ahead and fine-tune my entry by seeing some sort of candle formation telling me to get in. Okay, now I'm simplifying the process. Obviously, there's a lot more to it. Otherwise, I would be teaching an overall class on this. But you can see we're coming into that area right now on my 30-minute charts. That's telling me to expect a reversal soon. We haven't quite reached my area of supply yet that I want to sell, so I'm not taking the trade yet on the 5-minute chart. And if I want to, if I'm watching, yes, I would watch on the 1-minute chart and take my entry. But I could do the same thing if I were to take a look at a, let's do another pair. USD, JPY, we can go to the dollar yen. And I could go out to a daily chart here, or even, let's not even go that big, we'll go to 240. The same thing would occur if I'm looking at a 240-minute chart. Here I could look at a daily chart, and then I may even drill down into a 60-minute chart. I could do the same type of trading here. I would look at the long-term trend, look for the overall supply and demand zones, trade in the direction of the trend during corrections, and do supply or demand on my 240, and then drill down into my 60-minute chart if I need to time my entries. So that's how I get my higher probabilities for trading. That's all. When there's 2 levels of supply on top of each other, yeah, it's just a higher probability. You typically want to place your stop outside of the upper level instead of the lower level. So go back into, this was 30-minute. You can see that on the euro. Traditionally, you'll probably move deeply into the first level depending on how much basing you had. Okay, these are all things that we call odds enhancers to help us identify the best opportunities in the trade. So anyway, the point I was making by going to those different time frames is it doesn't matter what I'm trading or what time frame. I always use a minimum of 2, if not 3 time frames to trigger my entry and to find my entries. So once I'm in the trade, though, if I was using this 1-minute chart, like right now, we're coming into that 30-minute supply. We haven't hit my entry point yet for the euro dollar on the 5-minute chart. As you can see on the 5-minute here, we're below that area, so I'm not entering yet. On the 1-minute, we are getting some confirmation of bearish pressure, aren't we? Big red candle with a topping tail with selling pressure. We are starting to move down, but I'm not ready to trade this yet. I'm waiting for my opportunity. What about 1 hour, 15 minutes, 5 minutes, 1 minute? See, the problem is 15 minutes, I would actually use 3 minutes to time the entry. 15 minutes to 1 hour is fine, because in that case, you're still doing a multiple of 4, 5, or 6. I always want to use multiples of 4, 5, or 6. I got that from Dr. Alexander Elder. Read his book, Trading for a Living, many, many years ago, and I've always gone through pretty much my modified triple screen to be able to find trading opportunities. Okay? So that's a couple things that I'm looking at. Yeah, the euro is slipping down, but I don't think it's done with its overall upward trend yet. It is hitting that 30-minute supply zone, but we may still be able to get one more thrust to be able to get me into that trade. I'm still waiting for it. Now, going into the 5-minute chart, one of the other reasons why I look at this small time frame, okay, which book am I recommending? Yeah, I'm not really recommending any of those particular books. I read Trading for a Living. That was the first book I read to become a trader. I think he wrote in 1993. I started trading in 1998. But the main thing I took away from that book was to make sure I look at multiple time frames. Yeah, obviously, Online Trading Academy is what I recommend. You can only learn so much from books. The main benefit that you're going to be getting is working with someone who is trading in markets for a living. I only teach part-time because I trade full-time. So I'm doing a class this week and next week, and then I'm off for about 3 or 4 weeks while I'm going to be trading, and then I'll teach another class because I get bored. I only spend about 2 hours a day trading. I trade in the mornings generally near the open of the New York session. And if I want to trade a little bit more in the afternoon, sometimes I'll trade some of the end pairs. I live in California, so about 5 to 7 p.m. California time, and that's where the opening of the markets. Now, as far as books of banks, no, I don't know. I'm beloved of the India traders. So I should say that as far as the multiples here, instead of taking my trading time frame, multiplying by 4, 5, or 6, it's actually multiplied by char, panch, che, right? Is that what it is? A little bit of Hindi for you. Now, as far as outside reading, I don't necessarily recommend it. Okay. So what I'm looking for is, as we approach this supply zone, I do want to keep in mind a couple of things I learned from some bankers as well. One of the main things I learned from one of the bankers is that use on the 5-minute chart, okay, and you could change your time frame too. I'm going to go ahead and enable my moving average here. Where's that? I think it's this one. Yep. If you notice, this particular moving average, and I'll go ahead and adjust something so you can see what strategy I'm using here. So now it's the strategy. There we go. Okay. Oops. There it is. Moving average exponential 60 period. Okay. Yeah, I would say you don't really need to read anything. What you need to do is just see it done live. Okay. I did a charter market technician. Okay. Not CTA. But anyway, what I look for is this is a 300-minute exponential moving average. Okay, so if I'm on a 5-minute chart, obviously it's a 60-period EMA on a 5-minute chart. Talking to many, many bankers, not really bankers, traders for major banking houses, one of the things I found is that many of these powerful moves originate right at that moving average. Notice on the euro right there. And generally, unless you hit a major barrier such as supply or demand, that trend is going to continue in that particular direction and use that area as a springboard. You can see we had a little bit of a pause here, continued lower. On the retest of that 60-period moving average, that's where you saw the fast movement away. Once again, when we changed trend, first thing that happened, we started to pause in that area. Once after the pause, when we moved away and came back to the 60-period moving average, not only was it an area where we saw that bouncing, there was areas of buying pressure here, little pockets of buying pressure that supported the banking buying in that area. But every time, going back here once more, you can see we were trending downward, stumbled in the area of the 60, moved away, came back to it, and started an explosive move. It doesn't matter what chart you're looking at. We can go out to, let's see, pound and yen. Talk about currency wars, right? Does everyone use 50, 100, 200? Because that's what's in the books. That's the problem right there. Right? Roger just said, don't look at the books. Because if everybody uses what's in the books, what good are those books? Anybody who read a trading book would automatically just say, okay, great. I can read this trading book and make millions of dollars. And that just doesn't happen. What happens is you got to learn what the traders are really using, not what people are putting in books. That's part of the reason why I haven't written a book yet, I guess, right? Well, that and lazy. I'll be honest with you. But looking here, once again, when you see that we've got a little bit of stumbling going on, okay, we just crossed over that 60-period moving. After that stumbling is done, we move away, come back, right there. And not only would you come back to that 60, you also came back to the origin of some of the bullish pressure. That was your springboard and your opportunity for a long. And lots of opportunity. I'll trade whatever. Honestly, I'll trade whatever I can find that gives me an opportunity. Once again, here's our sideways movement. Moved away, came back up to the 60-period moving average on the 5-minute chart, and a nice little spring off that. So, obviously, I want to trade when the markets are most active. So I'm usually going to look for this trade opportunity near the beginning of sessions or during the active trading times. Okay, the active trading times are obviously going to be the beginning of New York, the beginning of Tokyo, and the beginning of Europe and London. So we're talking about the 8 a.m. to about 10 or 11 a.m. for each of those time frames. And that's where the most active is. Yes, so it would be a 20-period moving average on a 15-minute chart. So if I change my time frame, I can even go to a 30-minute chart and do a 10-period exponential moving average. I'll just adjust this. Can't really go much lower than that, though, but 10-period moving average, notice where many of these big moves are originating. And here, we broke through that area, came back up, tested that 10-period moving average, okay, and that's where the best opportunity was if you missed the beginning of the move. This is a way of joining the trend after it has already changed trend direction. Here we have a trend change. We stumbled at the area of the 60-period moving average. This is a 10-period moving average now on a 30-minute chart. Rallied up, pulled back. That opportunity is right there where we spring off of that. Okay. Why do we need a moving average? It just tells me where some of the major banks are going to buy or sell. You can't really do this on a 60-minute chart because you're looking at a 300-minute moving average. So it's just something that, yeah, exactly, as George is asking, maybe it's a good opportunity to add to your winning trade. If I've already bought in because I saw an area of demand or supply, and I see that we've run through this 300-minute moving average, stumbled a little bit, moved above, come back, that's an opportunity for me to add to a winning position or join the trend if it's one that I wasn't able to get into originally. I like trading pound yen in the European session and also actually more or less in the Asian session, okay, partially because it's very, very volatile. Okay, so if you don't like the volatility of the pound yen, obviously the euro yen is one that I could use that is a little less volatile. Okay. Now, when I'm trading, good question. When I move my stops, if I'm trading multiple time frames, I'll go back to my 5-minute here, because I'm traditionally trading on a 5-minute time frame. I identify my supply and demand on the bigger time frame. I'll go back to Euro USD where I have my nodes. Okay. And when I go to my trading time frame, this 5-minute chart, I'm going to manage my trades there, and that's where I'm going to put my stops as well. Put this back to 60. There we are. That is a 300-minute moving average. So in the trade that I'm looking at right now, there is no moving average I use for a one hour. Well, I'm not just an intraday trader, Luca. I trade on multiple time frames. Okay, but for the most part, for my income, yes, I trade on 5-minute charts and look at 30-minute charts from my longer-term perspective. When I'm looking at my investment portfolio, I trade Forex as well, and I will actually put in trades on daily or weekly charts, and I just hold them longer term. Okay. RSI, no, I don't use 70-30. Okay. Yes, set a moving average. Edward's asking, I use a moving average that equates to the 300-minute moving average. Absolutely. So on a 5-minute chart, it's 60 periods. On a 15-minute chart, it would be 20 periods. On a 30-minute chart, it would be 10 periods. And I can't really go higher than that on my time frame, at least for this. This was given to me by a trader who worked for a major institutional banking firm who did Forex trading. Okay. I traditionally do my own portfolio tracking and journaling using Microsoft Excel spreadsheets. It's a similar one to what we give out to our students in Online Training Academy. Okay. So once again, looking at the trend, I see that we're coming up to the supply zone, and you can see we're starting to stumble a little bit at the supply zone. What I look for on my trading time frame, I'm going to look for that supply zone that I marked off, and I have to go back here a little bit. There it is, that supply area. I'm not ready to sell yet because we're not at supply. And you can see that even on my 5-minute chart, if I were trying to sell right where we are, notice we've got red and green candles, but we haven't really broken down yet. The markets are not ready to break down. Okay. Once we get to my area of supply, that's when I'll go to my smallest time frame, and as you can see on the smallest time frame, I marked off that 5-minute supply zone, and I will look for the reason to go short in that area. Okay. It's possible to form another supply zone? Sure, it can be. Yeah. I worry mostly about the arrival on my trading time frame. So when I'm looking at my trade opportunity, I'm going to focus primarily on the trading time frame. That's where I'm going to enter. That's where I'm setting a stop. And to answer your question earlier, where do I place my stop? Only a few pips above this area of supply. Now, it depends on what I'm charting. Right now, I believe I'm charting the bid. Okay, that's what this defaults to. So if I did EURUSD.A, I think it is, now it's going to be a chart with the ask price. So what I could do here is, because I'm buying to cover my position, I would actually make sure that I include the spread. And perhaps I look at the supply zone. You always have to make sure you do this correctly. If I only put my stops based on the bid price, my stops get too tight, and I get stopped out, not because I'm wrong, but just because price took me out on that spread. So I enter to a bid chart, okay, right there. Is 10% a month a realistic number? Yeah. I try to get 10%, 1% a day rate of return on my money. No, what I'm trying to get on an individual trade, awesome, yeah. What I'm trying to get on an individual trade is anywhere from 40 to 60 pips, right? So depending on how much I have to put in for the capital, obviously $2,000 for a contract for one lot. Well, if I can make $400 to $600, I do a couple trades in a day, I'm already making my 1%. So here we are moving into our supply zone very quickly right now. So if I'm taking this trade, I'm putting in the trade, I'm putting my stop above that supply. If I need the confirmation for the trade, I'll go back to my bid chart here, just go back to EURUSD, that's where I put it in. Okay. Now I look, as we're coming into that area, do I see a reason to go short? Well, right now we do see a little bit of selling pressure for coming into that area. We came in very quickly. We're likely to turn around from the zone. If I really want confirmation, I'm going to wait for it to trade into the zone and look for some sort of a weak candle in there. So as far as how much pressure I give it or how many pips above, only a couple pips above the top of my zone. Because to me, if it breaks above that supply zone, even by a little bit, there's no reason for me to still be in the trade. Because the definition of a downtrend is that I should have overall lower highs and lower lows. If I start to make higher highs and we break above the supply zone, I shouldn't be in the trade anymore. Okay. I always make sure that if I have an opportunity to get out of my trade, it's going to offer me at least a 3-to-1 reward to risk ratio. That's one of the things I'm really looking for. And like I said, in this case, right now we're well above that 60-period moving average, so there's no reason for institutions to be buying here. There's an opportunity for us to be able to short, and I think I might be missing this opportunity. Let's take a look at my short time frame. Notice what's happening here. We're getting topping tails, topping tails, topping tails. There we go, moving a little bit more into the zone. And I'll wait to see if this pressure turns around. I would take the trade. However, once I'm in the trade, I would then turn around and set my stops based on my 5-minute chart, because that's where I'm managing my trade. On the 5-minute, I put in my stop there, my targets, as well as putting in my trailing stop and adjusting those as well. Do I read the background news? I don't care. News doesn't affect me. Really what happens with news is it becomes an excuse for what was already going to happen in the trend. So if I'm looking for an opportunity here, I'm watching this. We're starting to see a red candle form. We'll see if it starts to stall out our trend. So I can wait for my entry here. I'll just give it a minute, and that way if I have a bearish candle. Now the only thing I do with data releases, maybe I can do this on another WebEx, because I do have a lot more I can share with you guys, obviously, but economic news or data releases, I can actually trade those based on my supply and demand, but just take advantage of those moves. Okay, here we are. I'm going to go ahead and sell. And I just got filled on one lot. Where did I get filled here? I just got to check this. I got filled at 13007. And so I caught it as it's leaving the area. Now what I'm going to do to set my stop, as I mentioned, I could go back to my trading time frame. That's where I'm going to manage everything. It's right on the trading time frame. So my stop is going to have to be above 3013. Remember, I have to worry about the spread, and this is the bid chart, not the offer chart. So I'm going to go USD.A. So the chart for the offer, which is where I'm going to have to exit. So that is 15. So I'll place my stop 2 pips above that at 130.17. My first target, as I was mentioning before on the other chart, would be here. And that's my first target. My second target actually demand at 12925. So it was this level here. Right there. 2947. So I'd go ahead and I'll put in my, let's see, preferences. Let's do something here for a moment. Preferences, order entry. So allow me to do enough decimals is what I was looking for. I'll do it the easy way. I could just use my matrix. And let's do it as a full lot. There we go. And remember, I'm going to have 2 targets, so I can do a, sorry, I don't want this one. I want to do 2 targets, 1 stop. There we go. And I can edit this. So do 50%. There we go. Perfect. And I'm going to go ahead and place the OCO. I did the wrong one too tonight. There we go. 2 limit, 1 stop. Is this on the right? Oh, okay, I have to put it back on the euro dollar. As long as I note my levels that I'm going to be getting in. This trade's starting to work out. My first target, 29.47. Second target, 29.25, which is slightly above that, actually. So let me just change this over. There we go. Now I can place my OCO order, put it in, and yes, 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 and yes. There we go. Now my order's in. All I have to do here is adjust those stops. And my first one should be 130.17. It's right there. As a matter of fact, I'm going to adjust this a little bit as well because it's showing me fractions of a pip, and I don't really want to see that. There. Now I got the actual pips. So I can move this one down to 129.25, which is where I wanted my second target. And I'll get out just above that. So maybe 129.27, that'll be fine. I don't want to get too greedy. I always want to get out before I hit my targets. And I also want to, whoops, the other chart target was 129.47, so I'm going to get out just above that. And we'll just get out at 49. There we go. There. Now my orders are in place. I executed according to my plan. Take a look at the chart. So I didn't size there. You can see I'm in on my short, and my area of supply is holding right now. It hasn't turned around yet. There's my stop market order for my full lot. I'll take off 5 minis on the way down at that first area of demand. My second target is actually based on the demand zone that I noted here on the 30-minute chart. And as you can see, I'm getting out just above that area as well. I usually only take a few trades a day. I don't need to take many trades. I just have to be selective and find the right opportunities. So either this trade will work out or it won't. I have very little risk in comparison to the potential gain in my trade. As a matter of fact, you can see that I have got lots of buy order 130. I don't know about that. I mean, there's a lot of selling pressure and buying pressure. So I'm risking about $100 in order to make about 580 for the first move and 800 for the second. So how I trade through time frames, find the opportunity, found confirmation on the market's moving down, showing me the weakness at that area of supply. And normally I wouldn't take this trade. Well, maybe at this time of day. We're kind of coming out of the lunchtime for New York, so we may get a little bit more activity, but we do have, obviously, the European markets already closed or closing, and therefore it's not going to be one of the best trades I would have ever taken. I would much rather take this trade in the morning or at the beginning of the European session because that has a higher probability of this trade working out. But it's likely to move down to those levels just because of the overall trend, and that's where I'm seeing the supply and demand. Okay? Trend's mostly reverse. Well, that would work for me, wouldn't it? The trend reverses after lunch, but yeah, I'm just playing the highest probability, and by also combining some of the things that I've learned from some of the professional traders out in the world, a high probability for success. So anyway, I do have to get going. Unfortunately, I've got a class I got to teach. Some names? No, I'm not going to name anybody, but anyway, we'll see how this works out. You can go ahead and follow it on your own. Like I said, it's not one of the best trades that I would have taken. I definitely would like to have taken a trade earlier in the morning and look for a better opportunity, but this is what I have available to me. It doesn't look like a bad trade. I probably could look for a bigger move and keep my stop well above the 30-minute supply zone. So we'll see. But I'm pretty confident this should work out. And yeah, hopefully they'll have me back here for some more webinars. I'd love to share more information with you and even some more live trades. So until next time, guys, trade well. Take care.